I'm sitting with Simon Holly, Chairman and Partner of Altyon LP, the commercial property fund specialist based in Mayfair, London. The Altyon partners have up to now concentrated on large commercial property investments for the ultra-high net worth market, as well as the larger sophisticated investors. Altyon are now launching exempt property limited partnership funds and exempt property unit trusts, EPUTs, which will give access to this market for professional investor clients of independent financial advisors. Simon Holly, thank you for taking the time today to talk through a little bit about yourself and the Altyon business. First of all, could you describe a bit about your background as a property expert and your experience?
Yes, I'm a founding partner of Altyon, but prior to that I was the chairman of agency and development at CB Richard Ellis. CB Richard Ellis is the largest global property advisory group in the world, and prior to that I was a founding partner and senior partner of Holly Blake for some 13 years prior to then selling it to CBRE. Currently I'm an advisor to Oracle Corporation and Nokia.
I understand that you're continuing to work at CBRE as a senior consultant. Does that offer synergies in terms of your role at Altyon?
Yes, it does. It gives me an access to the global skills and expertise that CBRE have, but more importantly, it gives me access to the market and to deal flow.
How was the fund created and what was its original purpose and structure?
Well, we were approached by a number of leading IFAs who wanted to get access to the commercial property market for their clients. They wanted to use our specialist knowledge and expertise to find the right type of transactions for their clients, and we recognised a very good opportunity to raise equity and funds for investment in the commercial market.
So part of the structure is a UK exempt property unit trust. It was created for what purpose?
It was created to give SIPP and SAS investors access to the commercial property market and to deal flows that they wouldn't normally have access to.
So what's the entry level for this fund?
Typically for the expert investor in a limited partnership in the UK for commercial property investment, the level would be around 250,000. However, for the SIPP and the SAS investor, the level will be probably around 50,000.
You also run another fund. How do you anticipate this being operated alongside the main fund?
We do run another fund in parallel to this fund. It has a different set of investment criteria and objectives, so there'll be no conflicts.
We understand that you're considering putting together a series of smaller funds which will be targeted at raising between 15 and 25 million. What type of property will you be looking for?
We are not looking for any specific type of property. We will be totally opportunity-led. The main criteria is to achieve returns, the target returns for our investors. So we will not be prescriptive or look at investing any certain percentages in any sector in the market.
The fund investment cycle is, I understand, proposed to be 5 years with a 2-year run-off. Could you explain this to me a bit further?
We'll be looking to invest immediately within the first 2 to 3 years to take advantage of the rising market. We will then be looking to dispose of assets over the following 2 to 3 years to the end of the fund, and thereafter we will have a 2-year run-off period in case there are any assets that we haven't disposed of.
So is the fund a suitable investment vehicle for SIPP and SAS investors?
Well, investors must take professional advice. However, we believe that the fund will be suitable for SIPP and SAS investors because it will give them access to the commercial property market, which they wouldn't otherwise have.
And as a manager, how do you plan to deploy the investments?
As I've said before, totally opportunistically. We will look at each deal that comes in. The main criteria is the returns that the deal can offer. We'll use our skill sets to maximise returns for investors.
What is the target performance, or IRR?
We're looking to achieve a minimum of 12% on an annualised basis over the term of the fund. However, this is not guaranteed.
And finally, how do you read the current commercial property market?
The commercial market has fallen by about 50% over the last 2 to 3 years. I believe it has now bottomed and beginning to rise, and is an ideal opportunity to invest. We won't be concentrating on the prime end of the market because this has bounced back by at least 40% and is mainly populated now by the larger institutions. we'll be really concentrating more on the secondary market, where we can use our asset management skills to achieve value. That'll be the industrial sector, the retail sector, and the office sector. Furthermore, we will be looking to work with the major banks who currently hold large stocks of distressed assets. We'll be using our equity to buy cheap commercial property debt and to buy assets from the banks, which we feel would show very attractive returns in the short term.
Simon Holly, thank you very much for your time.
Thank you.